I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. Today is Wednesday, July 8th, and we're looking at two different markets. The first one we're looking at here is corn. Then we'll finish by touching on the wheat market, which we talked about in yesterday's episode of Tech Talk. But let's jump into this corn chart. This is the December contract, new crop contract. We had a pullback in the overnight, but managed to hold significant support. And we've talked about this in the past two reports. As you can see here, the Grain Express. This is what we send out to clients each and every morning, kind of giving them a technical and fundamental roadmap and ideas to what we're looking at for this day's trade. And over the past 2 days, the past two mornings, we talked about significant support. 4-star support, 346 to 349.5. We had noted that if you had reduced long exposure or went short ahead of last weekend, this would be a spot to look at buying back and getting some of that exposure back on. From a risk-reward perspective, these 4-star support and resistance pockets are great areas, as you know that your risk is somewhat limited and tight on a breakdown or breakout above those levels. So we did manage to defend that 4-star support. We rallied back into the afternoon, which is really encouraging and keeps the bulls in control. We're starting to mark higher lows and higher highs. The next line in the sand that the bulls really want to get a closeout above is the recent top end of the range. That comes in 360 to 363.5. A conviction closeout above that pocket encourages additional short covering from the funds, but it might take us quite a bit to get up there, and we're not really looking for that big breakout move here in the next couple of days. We do have a USDA report on Friday. Potentially that has some fireworks wrapped up into it, but we wouldn't be surprised to see the market maybe stabilize and chop around a little bit after that big move that we saw last week. So ahead of this USDA report, we'd temper the expectations. I know there's been a lot of jawboning and hot air flying back and forth on social media between being bullish and being bearish and different weather maps, etc. I'd urge you to kind of tune out that noise, find something that works for you, stick to your strategy, and be sure to manage risk appropriately. Now, let's wrap things up looking at September wheat. That is, let's see if I can pull it up here. Here we are, September wheat. We had that big move. In yesterday's Tech Talk, we talked about this $5 area being technically and psychologically significant. If we got a breakout above there, consecutive closes above there, that could potentially spur some additional short covering, and that's exactly what we saw today and kind of what we talked about in the morning report. If you look here, the breakout above this 497, 502.25 area, the next line in the sand is 517.5, and that was the top end of today's trade, the highs of the day. If we can continue to see follow through into tomorrow's session, I really wouldn't be surprised, as mentioned in yesterday's Tech Talk, to see the market continue to rally towards the top end of the range from June, which comes in closer to 525 to 530. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Sloup of Blue Line Futures from the Chicago Board of Trade. And remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.